Hey everyone, this is Chris. Welcome back to my YouTube channel. Today we're going to start part one of a three-part series all about the process of getting a mortgage. Because if you're a first-time homebuyer, you certainly don't know how this process works. And more than likely, if you've had a house or two in the past, you've kind of forgotten how it goes. And so this can be a good reference point for you to kind of go back and remember what the process looks like. So part one, we're going to take the time to figure out what the application process looks like, the pre-qualification process, and then up into you being able to put an offer in on a new home. And so let's start at the very beginning. Before you reach out to anybody, there are a couple things that you can do in order to prepare yourself for those initial conversations. And this would be maybe even a few months before you even apply. Think about your credit, because one thing that the banker is going to look at in order to get you qualified for the house is what your credit score is. And there's a few simple things that you can be doing ahead of time that can make you real money when it comes to actually putting the loan together. So number one, your credit cards. If you have credit cards sitting out there, think about what your balances are. Part of the credit score is created by knowing what the total limit of your credit cards are compared to how much you're using. So if in advance, if you can, get your limits, your usage down to about 30% of your total usage of all your credit cards. That is going to, ahead of time, get your credit score to the optimal place. And things like mortgage insurance uses your credit score in some cases. Your rate that you actually get on your home loan can include the credit score that you have. And so just by a month or two ahead of time, if you can get those credit balances down, that is going to help you out with your loan. So that's one hint or tip that you can use before you even talk to anybody. But your first conversation should be with the banker, because at the end of the day, the banker is going to help you figure out what is most comfortable for you with your home loan. And then from there, you can actually go out and start looking at homes. So you kind of don't want to put the cart before the horse and go out and start looking at homes before you really even know what you can afford and what you want your monthly payment to look like. Because I've run into it with people on both ends of the spectrum, people who underestimate what they can get. They assume they're going to get a smaller house, and then they look at it and the payment actually isn't what they thought. And so they realize, hey, I can afford more than I think, and I'm actually comfortable with that payment. And that's great. They're super surprised. On the other end too, I've had people where they overestimate what they are comfortable with, and they kind of dream a lot bigger, and then they look at the monthly payment and it's not quite right for them at the moment. And so you really want to take the time to go through those finances first, to go through the monthly payments beforehand, so you can go out and actually look at homes that you know and feel confident that you're going to enjoy. So that first conversation with your banker is it's just going to be kind of like putting a puzzle together. And so the first thing that you should know is that you shouldn't feel judged. I know there's always some bashfulness when it comes to finances, and there's things that people maybe don't want to share. And so just know that the banker isn't there to try to pry into your life and try to make you feel uncomfortable, and certainly not to judge you about what's going on with your finances. It is all about putting the puzzle together, because the banker knows what to look for, and as you highlight certain things that are going on in your life, they may dig into certain pieces a little bit more, because they know that there's things under there that sometimes need to be uncovered because there's regulations around that. And so the banker's point of view is, aside from getting to know you and having a connection, when it comes to them doing their work, they're really trying to figure out, making sure that we're within guidelines for you. Now, when you actually sit down and start putting that puzzle together, there's a few overarching things that a banker or a lender is going to be asking you about. They're ultimately trying to get down to the bottom of, what does your income look like? What debts do you have? And what do your assets look like? And there's obviously more things that they're going to look at depending on your situation, but those are kind of the three main things that they're going to be asking questions about. So starting with your income, do you get paid as a W-2 employee? Do you own your own business? Do you have income from other places that is kind of on the side? Those are all things to talk through at the time of the first conversation, so that the banker knows what documentation that they're going to need in order to verify those things. And I know this is the beginning of a lot of paperwork, so just know that no lender wants to get a ton of paperwork from you. It's just kind of the name of the game, because at the end of the day, the last probably 20 years, things have just gotten a little bit more strict, I would say, since 2008. and there's just a lot more verification that needs to happen, and then ultimately it's just for your protection and safety that you don't get into a loan that doesn't fit you. And so if you're an employee somewhere, they're probably going to need W-2s and pay stubs just to verify what your hours have looked like. They're going to want to dig into, have you been a full-time 40-hour employee, or have you been less than that? Variable income has been a big deal in the mortgage industry the last few years. So if you've been working less than 40, that's probably a good thing to mention, because that can cause trip-ups later on if maybe you have to use average amount of hours in calculating your income. So be upfront with that. That's helpful. If you're self-employed, the banker or lender is going to need taxes, either from your business or your personal or both, just to make sure that they understand the full picture of your income. Next part is debts. So typically all the debts are going to come through a credit report that the lender is going to get. And so, but if there are things that you know that you've co-signed on, maybe that you haven't, that maybe wouldn't get reported to a credit bureau, it's probably good to mention those things. The lender can include those if they know that it's something that needs to be included. But other than that, all the debts are going to come in through the credit report. Car loans, personal loans, credit cards, student loans, those are kind of the main items that pop up as debts on a credit report. Things that do not pop up on credit reports are utilities, cell phone bills, subscriptions. Those types of things do not get counted in what we would call a debt to income ratio. Now, the debt to income ratio really is a big piece of the puzzle that helps the lender ultimately know affordability. You know, how tight are your finances if you include this new house or not. And so some things get included in that debt to income ratio while other things do not. And so the final thing that the lender is going to probably dig into are your assets. Because at the end of the day, you're probably going to be bringing some money to the closing in the form of a down payment and probably covering some closing costs. And so they're ultimately just needing to know where that money is coming from. Are you selling another house and bringing that equity over to the new one? Are you getting a gift from somebody? Do you have it in savings? Do you have it in a money market account or a retirement account? All of those things are very common, and they all require different types of documentation. And so just be ready to provide documents for those types of things. Again, it feels like they're asking a lot, but ultimately there's a reason behind everything. You know, they have to figure out where the original source of every dollar is coming from. And like I tell customers always, is that somewhere at some point in some place far away, somebody did something that caused a problem, and now we all get to enjoy the fruits of that. We get to provide paperwork to make sure that we are not doing the same bad practice. So ultimately, we're just trying to make sure that we have the right verification so that we can get you pre-qualified and eventually into your house. And finally, with your assets, you're more than likely going to need to provide bank statements, because no matter where the money is coming from, ultimately it's going to be going into a bank account, hopefully probably consolidated into one. And at the end of the day, we probably need to have some kind of verification that all the money has reached its destination and is ready to go for closing. And so we kind of want to track the beginning and the end of any money that's being moved around. Now with that, there's always some things that are good to remember. Don't take out any new loans, because that would include one of the three big things I just mentioned: income, debts, or assets. So a new loan is going to add another debt payment into the scenario. So that's why lenders will always say, don't take out any new loans, no big surprises, don't change your job, because that would change the income that's being used. Or if you have any large sums of money that are coming in for whatever reason, some people sell things, some people get money from their parents or whatever it might be. So if there's any money that gets added into your account that isn't normal, it might need to be tracked. So just be prepared for that as well. After all the documentation's been collected, you're probably going to sit down with your lender and walk through different loan scenarios, because you, as the person who's buying the home, probably want to know, what range is going to fit me, what range am I going to be comfortable with. And so that's the moment where you can kind of take some different rates and figure out some different scenarios, different down payment amounts, different purchase price amounts, figure out what your final monthly payment is going to be in all of those scenarios. And hopefully at the end of the day, you can figure out kind of your low range and your high range, so that when you're out, you may be looking at houses, you feel equipped to be able to know, okay, I'm stretching on this one, so this is my top limit, and maybe I need to ask for these extra things to make this one work. Or if you're at the bottom limit, maybe you can let some certain things go, or whatever it might be. But that's the moment where you can kind of be equipped for shopping. And then it also gives the lender the ability to probably make an official pre-qualification letter that they will give you to be able to go out and take with you, because once you're out shopping, any seller, person that owns a house is going to want to see with the offer that you give that you've been to a bank and the bank has checked over your stuff and has given you a tentative thumbs up. So obviously we're not through the full process, but they just want to see that you have been to a bank so far. So at that point, you can take that pre-qualification letter and go shopping, and that's always the fun part, because at that point then the lender kind of gets to hang back a little bit, and then you get to go out probably with a real estate agent and go shopping, and usually the lender will just be there for you to run new scenarios or whatever you might need. And so we'll pick it up there with the next video, where we take the process. Once you get a contract in place, what happens next? And so thank you so much for tuning in to this YouTube video today. I'm so thankful that you stopped by the channel. Please comment and like. Let's interact on the page. I would just love to get more activity happening, so I know I'm helping some people out there. Have a wonderful day. Thank you so much for stopping by.